Hello everyone, today is Tuesday, October 27th, 2020. My name is Evan. Welcome back to another midweek stock market analysis video. We're going to jump right into it today with our market technicals dashboard. You can see stocks here were mostly negative across the board. Dow and IWM, which is the Russell 2000, almost 1% lower today. S&P 500 down 0.3%. Nasdaq 100 clearly outperforming, up almost 1% on the session. It's a big earnings week for the Nasdaq, specifically all those mega cap tech stocks. I think Microsoft actually after the close. So lots to pay attention to here in terms of the Qs. 5-day change numbers are firmly negative here across all the major indices. Once again, the Nasdaq is the standout, still negative, but only down 0.6% versus, say, the Dow, which is down almost 3%, SPY down 1.5%. All of the major indices are now below the 10 SMA, and some of them are starting to lose the 50. If we scroll down and take a look at sectors over the past 5 days, we've got 2 in the positive. That's communication services and utilities. Number 3 is healthcare, which is still negative here over the past 5 days. On the downside, industrials, energy, materials round out from 3 to 4.5% to underperforming or to the downside over 5 days. Major markets, VIX, so volatility, fear, that's what's catching a bid right now, up almost 12%, followed by natural gas and TLT finally catching a bid. And on the downside, we've got oil, we've got international markets, and we have the S&P 500. So let's jump into the charts here. There's lots of new developments going on here, lots of levels and areas and things that we've been talking about in the market starting to, kind of crack or more for kind of play out at some significant areas. So first, we're going to kick things off with our equity market grid. This is TC2000. We've got our smart trend filters. So these are custom price and volume indicator. Those are the dots you see on this chart. They measure trend and trend strength, and price itself is the white dashed line. So this is a weekly chart. No change here on the weekly chart. This is still long-term bullish outlooks on everything longer term. On the daily chart, though, things are getting a bit more noisy. Things are getting a bit more turbulent here. You can see all of the 3 U.S. markets here. So S&P in the top left, Nasdaq top right, Russell 2000 bottom left. All of them are in the yellow transition zone as of this week. So the prior trend is still bullish in all of these markets. The way we like to interpret this is we still give benefit of the doubt to the prevailing trend, the trend that was in place before we went into the transition mode, but it does tell us that there's turbulence, there's mixed signals, and this is where things can start to crack and tip and move in the other direction. So we want to pay close attention. All of them still in the yellow. Bottom right is ACWX, so this is international markets. You can see that printed a fresh sell signal here as of today. So that's finally changing the direction here for the first time since let's see, the 6th, so the start of the month of October. We've essentially had a bullish reading there, and that is tipping now to the downside. So that is the outlook in terms of trend. Everything is holding on right now, but in transition mode. And let's dig into the price action here, because this will give us a little more of a precise, closer look at what's going on here. And this is the roadmap that we've been following here. In terms of the S&P 500, you can see we are right in this band here of 3,400 to 3,411. This is the zone that we've had on this chart for some time. We broke out at the very start of this month. We had a few day surge through this $3,400 level. And then ever since the 12th, we have essentially been grinding lower. We've been pulling back. There's been some volatility and some sideways chop, but more or less we've been steadily sort of declining here in the S&P 500, and we're right back at what we've been calling our line in the sand. This is the spot, this is the zone where if we want to keep this market healthy, pent up, and bullish, we would want to see buyers step in and support. We're right back here, and it is a fight right now. You can see that we arguably are closing below this zone, but it's very much in the realm of noise here. This is again where you'd want to see the buyers arrive, and it does seem like it's going down to the wire. We undercut it clearly intraday in yesterday's session, but notice where we closed, we were driven off of the lows and closed us right up at that 3,400 level. So you can see the fight going on here. This is a high stakes zone. We are quite oversold in the short term in terms of, the last 2 weeks has basically been nothing but down. So we are kind of stretched to the downside. We're at a logical spot you'd expect buyers to step in at. We just need to see the buyers actually step in. Otherwise, things get pretty dicey if we start continuing to roll over here and lose this 3,400. So that's the key zone. We're at it right now. Let's see how we finish out the week. It's a very busy earnings week, so there's certainly a lot of catalysts. Obviously, the election is next week as well. I think stimulus is just clearly off the table until after election. I don't see any, Hail Marys there in terms of getting anything done. So that's sort of the landscape. That's what we're looking at in terms of the S&P 500. If we go to the Russell 2000, you can see again, this is, kind of the zone we've been talking about, 159. This keeps this market holding up and acting as best and as bullish as possible, and we're starting to lose that, particularly today, as we fell back below this 159 level, or for the first time really closing below this zone, and this again puts kind of, this consolidation into jeopardy here. The fact that we are losing the breakout from August and September, and the longer we stay below 159, the worse it looks for the bull case. So this is where you're starting to see things tip to the bearish side. But if we go to the Nasdaq 100, here's where you're still seeing things hold up, and you're not seeing the crack just yet. Again, it's similar to the S&P 500, a little bit better, in fact. The 280 here was the zone that we were paying attention to. You can see, again, we undercut it yesterday's session. On Monday's session, we were trading all the way down to 276 and change, but we did reclaim and close over 280 to close out the day yesterday. And then you can see the pop higher today, back over 280 and back into this range here. So the cues are, kind of on the optimistic side that buyers are arriving here, that the market is going to find some support. The Russell 2000 is on the pessimistic side, where things are rolling over a bit. And then the S&P 500 is kind of your square in the middle, right at the start line, waiting to see which way things are going. So that is the technical landscape we're looking at right now. It's a mixed market. There's some mixed signals, and the cues right now are the bright spot. We do have, again, a very busy week of earnings, so it'll be interesting to see how we finish out this week. I think it's going to be telling. The only other thing I would kind of add on here from a price analysis, price action, bar by bar analysis here, I would say that the fact that we had this 4-day very tight range in the Qs, which we talked about in our last video, we highlighted the fact that this was so tight and overlapping. We had what was, basically all systems go for this break down from this range yesterday. So we got, again, as low as 276. That should have been the spot where bears really attacked, latched on, and sort of broke this market down. But the fact that we sort of rejected it and are starting to pop back up right into this range here does get me, thinking that we really just don't have the selling pressure to continue down here. And it does seem like this is a market that wants to push higher. So again, not super strong conviction on that. I'm willing to adapt and throw away that thesis if we start to roll back over, but given the fact that we sort of failed yesterday on what should have been, after such tight range, a really kind of that layup to really break us down and move in the direction, we failed, the bears stumbled, and we're popping back up. And it seems likely that, if these earnings can hang in there, if these earnings are good enough for expectations, then it seems like we could pop here in the Qs. So let's play it by ear, but that's sort of the price action read for this market. Now, that's sort of the landscape in terms of technical major markets. Thing I want to talk about here too is the VIX, because the VIX is certainly a very pessimistic reading, because we finally got a resolve from this range. Since, almost the beginning of September, we've been trading between 25 and 30. This has been a 5-point range in the VIX. You basically, buy stocks at the top end of the range, sell stocks at the low end of the VIX range. You could hedge, you could do all kinds of different things, but that's sort of the playbook here that has been working for the VIX, and that changed yesterday because we got a clear breakout over 30 in the VIX, and it's amazing how conditioned and normal even trading a 26 VIX has been for so long. It's such a rare thing in history to see a VIX just stubbornly staying into the upper to mid 20s with a market that's nearly at highs. It's something we just haven't really seen. You'd expect that we were continuing to just cascade lower, and we were 30%, 40% off of highs, but that's just not the case. So the fact that we are now resolving this range to the upside in VIX has got to put a little more pressure and a little more kind of worry on this market. A VIX over 30 is something you have to be careful of. So as on the fence as we are about some of these markets here in the short term, you do want to keep a close watch on VIX here, and you really want to be an experienced trader. You need to know what you're doing to be trading this type of environment, because risk can escalate really fast here, especially with volatility at these levels. So you want to be cautious. You really want to see the VIX back below 30. I mean, that is kind of your all clear signal, right? In some respects, in the short term, if you get the VIX to start to drop back below 30 for this, for these recent highs to sort of fail here, then that will likely coincide with cues and buyers stepping back in at these levels, but it'll also sort of coincide with some fear coming out. May not happen till after the election, right? Might stay bid until that event, but you have to be cautious here, and you really want to be just aware of the market environment you're in, and make sure you're keeping that into account. VIX did break out on Monday. We should respect it, and you want to be a bit cautious here. So that's the read. That's what I'm looking at here in terms of major markets. If we go to some of these other markets now, we go to credit and we go to our other grid here. You can see, well, in fact, let's go to VIX, which you can see again, the VIX. This transition, we talked about it last week. In fact, we got a buy signal here in VIX on Wednesday. So Wednesday, when the VIX was still trading in the upper 20s, our model went bullish here on VIX. Lo and behold, it had a 20% up day on Monday, and it's trading up around 32. So, that is still playing itself out. It's still in a bullish reading here, which again is just basically bearish for stocks when VIX is bullish on this trend. So that's what's going on there in the daily chart. And again, all of this is in context of the daily chart. We always like to try and remind that time frames matter here. Longer term, things look different, right? If you're looking at this market 4 months out versus, a week out, this is very different reading. So you have to keep that in mind. You have to understand time frames, but VIX here on that daily breakout. TLT getting a rebound. We spent some time talking about that in our past video. This has been a tough trade for the past 2 months or so. It's basically continued to slide, but you can see that's rebounding. It still hasn't transitioned up, but it is printing yellow here. It is trying to get back above its trend, trying to repair some damage here in TLT. So it'll be interesting to watch that. That's also at a pretty interesting spot. If we go to commodities next and we look at the daily chart here, you can see gold still moving sideways, really making up its mind, but still putting in this nice consolidation here. So let's keep an eye on that. Silver is neutral as well, but had a bunch of bullish readings in here, so benefit of the doubt to the buyers on silver. And oil finally transitioned back down. This has been a very volatile range, very wide range of trading here in USO, printing a sell signal, so you got to be cautious there. DBC hasn't quite gone a sell signal yet at this time. So let's get into a couple of individual sectors. So XLK, let's actually go to this one here. So you can see XLK printed a sell signal today for the first time. So this here, went to bearish trend. It is losing this zone here. So with the Qs, the Nasdaq 100 is sort of holding this area right in here, and the XLK has lost it. So XLK is a transition down. XLB, we talked about this here as being a good-looking market, trading at highs, consolidating nice and tight. Well, that's starting to break down here as well. So this trade is not triggering to new highs here. It's not breaking out. It's in fact sort of dropping and rolling over a bit. So XLB, our excitement there, our interest there has certainly kind of gone down. If we look at, let's see, XLP, this is starting to lose the prior September level and starting to break down a little bit. We do still own this, right, as a longer term position. So we still have a long trade in here in XLP, but in the short term, it is bearish. That it is losing 65 and change. And last but not least is XLU, which is one of the few things that is just clearly continues to work. Utilities continues to remain bullish trend, remain grinding to the upside, and it's just still acting very technically strong throughout this market. So this is one of the bright spots right now so far this week. So that's it. That is the full wrap up here. We had let's see if Microsoft earnings are out. A little bit of movement. Let's see what's going on in the after hours. Yeah, so they might be out now. I'm recording this. Let's see, what time is it? About 20 minutes after the hour. It looks like something has been out. I didn't catch the headline, but looks like so far the initial reactions trying to move to the upside a little bit. So again, this is going to be kind of the what we're looking at for the rest of this week. Do some of these mega cap companies that have huge weights in the SPY and the Qs and a lot of the ETFs, do they get some favorable reactions? Those will certainly help lift the broad indices if they do. So that's it. That is what I got for this week's video. Thanks as always for tuning in. Every Tuesday we do our midweek analysis. Friday's our long form analysis, and we'll be back tomorrow with some swing trade ideas. Thanks for tuning in and watching, and hope you have a great rest of the day.